Hi, everyone. We wanted to provide a video for an update on the Employee Retention Credit. The credit originated under the CARES Act, but it's been amended multiple times since, and guidance was issued earlier this month. So to give a brief overview of this credit, the credit applies to calendar years 2020 and 2021, and two different sets of rules apply to the respective years. For 2020, the credit is equal to 50% of the qualifying wages paid, up to $5,000 per employee per year. For 2021, the credit was enhanced to equal up to 70% of the qualifying wages paid, up to $7,000 per employee per quarter. To be eligible for the credit, the business needs to show a qualifying reduction in gross receipts or be fully or partially shut down to a government order. For more details on those qualifications, I encourage you to view our Employee Retention Credit video that was created in January. A link to that video will be provided at the end of this segment. On March 1st, the IRS released Notice 2021-20. That notice provides guidance related to the 2020 credit and contains 71 FAQs, many of which were previously available on the IRS website, but I'd like to discuss 2 points here. The first is defining a partial shutdown. One area that is addressed in the guidance is what constitutes a partial shutdown. Now, this area of the credit is very nuanced, but let's walk through an example of a restaurant because it is very easy to visualize. So we have ABC Restaurant. It must close its on-site dining due to a government order. They continue carry-out, drive-through, and delivery. The on-site dining is more than a nominal portion of its business. This business is considered to be subject to a partial shutdown. 2 months later, the restaurant is able to offer sit-down service outdoors, but indoors remains closed. Indoor dining is more than a nominal portion of its business. This restaurant is partially shut down. The following month, indoor dining is permitted, but all tables must be spaced 6 feet apart. This spacing constraint has more than a nominal effect on its business operations. This is still considered a partial shutdown, even though all categories of its operations are resumed to some extent. You'll notice that I didn't mention whether the revenues had increased or decreased during this period. If a business is considered partially shut down, it is eligible for the credit for the duration of the shutdown and does not need to meet the gross receipts test. The guidance goes on further to define a nominal portion of a business as being 10% of the business based on receipts or service hours. The guidance stops short, however, in providing a similar quantitative definition for nominal effect. Rather, it provides a number of factors provided that require a consideration of the business's facts and circumstances. The second area that we wanted to cover that was included in this guidance of Notice 21-20 is the coordination with the PPP wages. The tax code contains provisions that prohibit a double benefit between the Employee Retention Credit, ERC for short, and other tax credits, as well as wages that were paid by PPP funds that have been forgiven. By default, wages are first applied towards the ERC. However, taxpayers may elect to use the wages for other purposes. Including the wages on a PPP forgiveness application is a deemed election to use those wages for PPP rather than ERC. In short, a deemed election is made with respect to the PPP wages up to the minimum amount of payroll costs sufficient to support PPP forgiveness. So here are 2 examples to explain that. If a borrower receives a PPP loan for $200,000 and lists $250,000 of wages on its forgiveness application and does not report any non-payroll costs, the employer is able to allocate $50,000 of wages towards the ERC, and $200,000 of wages must be allocated towards the PPP. The second example would be if a borrower receives a PPP loan of $200,000 and lists $250,000 of wages on its forgiveness application, and it also includes $90,000 of non-payroll costs, the borrower can allocate $130,000 of wages to the ERC. This is because the minimum amount of payroll costs needed for the PPP forgiveness was 60% of the loan amount, or $120,000. And it had sufficient amount of non-payroll costs to cover the rest of the loan amount, and in fact included those costs on the application. As you can see, if you otherwise meet the eligibility requirements of the ERC, there is a certain amount of strategy and analysis that could be done with your PPP forgiveness application in order to maximize the credit amount for the ERC. The American Rescue Plan Act was recently passed, and that included provisions that affected the ERC. Now, the provisions in this act affects periods beginning July 1st, 2021 through December 31st, 2021. The act extended the tax credit through the end of 2021. Previously, it was set to expire on June 30th. With this extension, the maximum credit per employee has theoretically been increased to $28,000. The Act also added additional eligibility segments. The first of which is the recovery startup business. And this is a business that began after February 15th, 2020. It has average annual gross receipts not to exceed $1 million and is not otherwise an eligible employer, meaning it doesn't meet the gross receipts test or a full or partial shutdown test. In effect, it's providing a tax break for entrepreneurs who started or plan to start a business during this recovery. The credit is limited to $50,000 for this business segment. The second segment of businesses that have been added for an eligibility requirement is severely financially distressed employer. Employers that have experienced a 90% decline in gross receipts compared to that same quarter in 2019 can take all wages into account for that quarter for purposes of this credit, not subject to the limitations of the $10,000 per employee limitation. If you think that this credit applies to you, please reach out to your H2R CPA liaison. We'll be able to work with you on analyzing your eligibility qualifications, calculating the credit, discussing strategy as it pertains to maximizing the credit in coordination with your PPP loan forgiveness, and ultimately assisting you to file the forms necessary to claim the credit. We hope that you found this video helpful, and we appreciate you watching. Thanks.